Let me tell you about the moment I almost quit trading forever. It was not because I did not understand the market. It was not because my strategy was broken. It was because I was trading so big that I could barely breathe. Every tick felt like a verdict. Every candle felt personal. Every small pullback felt like the market was punishing me. And I could not figure out why I kept breaking my own rules. Why I could not execute the plan I knew worked. Why discipline felt impossible. I thought I was weak. I thought I lacked commitment. But the truth was much simpler and much harder to accept. My position size was destroying my ability to think, and that realization saved my career. For a long time, I believed what most traders believe. If I wanted to make more money, I needed to trade bigger, bigger size, bigger risk, bigger wins. That is how you grow an account, right? That is what confident traders do. Small trades felt like a waste of time, like I was not serious, like I was playing it safe instead of going for it. And every time I saw someone post a big win, I felt like that was what I was supposed to be doing. So I pushed. I increased my size. I told myself I believed in my strategy. And if I really believed, I should risk more. But here is what I did not understand. Position size does not just control how much you make or lose. It controls your psychology. It controls how your brain functions under pressure. And once your size crosses a certain threshold, your ability to think clearly starts to disappear. And when your ability to think clearly disappears, it is almost certain that everything will go wrong. When I was trading too big, I was not trading the market anymore. I was trading my account balance. Every trade felt critical. Every move mattered too much. I would see a clean setup. Everything aligned. Structure made sense. Context was clear. And instead of calmly executing my plan, I would feel this pressure in my chest. My heart rate would spike. And I would think, this is the one. This trade needs to work. Not because the probabilities were better, not because my edge improved, but because emotionally I needed it to work. And that is when trading stops being about probabilities and starts being about survival. And trading should not be about survival, because that will increase our probability of acting impulsively. We will act with our primitive brain, and this will come back to us as I broke my discipline again. Here is what happens inside your mind when you put on a trade that is too big for you. At first, you feel powerful, energized. This is it. This trade is going to make a difference. But then the market moves. Maybe it moves against you slightly. Maybe it moves in your direction but pulls back. And suddenly something shifts. Your breathing changes, your focus narrows. You start watching every tick. Every candle becomes personal. Every move feels like it is saying something about you. This is not trading anymore. This is your brain detecting a threat. Not a physical threat, but a threat to your account, to your sense of being okay. And when your brain goes into survival mode, it stops being rational. It stops following rules. It starts making decisions based on fear and urgency. If you are experiencing all of this, the first thing you need to do is reduce your position size. Your position size should not be so small that it takes you away from seriousness completely. At the same time, it should not be so large that it puts you into survival mode. You must find the balance, and you must take the risk that provides balance for you. Because when fear and urgency take the wheel, nothing good comes out of it. You start thinking thoughts like this. I should have taken profit when I had the chance. I cannot afford to lose this trade. Maybe I should move my stop just a little bit. Maybe I should get out now before it gets worse. These thoughts feel logical in the moment. They feel like you are being smart, protecting yourself. But they are not logical. They are emotional reactions disguised as logic. And the reason they are happening is not because your strategy is wrong. It is because the risk is too large for your mind to handle objectively. Everything starts and ends in your head. If you want to create the most ideal trading environment for yourself, the first thing you need to do is find your most ideal risk amount. This is different for everyone, and most of the time we think the reason we break discipline is a character issue. Here is something most traders do not understand. Your ability to follow rules is not a character issue. It is not about willpower. It is about whether your nervous system feels safe enough to let you follow the rules. When you are calm, following rules is easy. You trust your system. You execute without hesitation. But when you are afraid, following rules becomes almost impossible, because fear overrides logic. That is how survival works. And when your position size is too large, your brain interprets a losing trade as danger, and it takes over your decision-making to protect you. You sabotage yourself. You self-sabotage. After everything is over, you blame yourself again for breaking discipline. Actually, you did not create the conditions for yourself to be disciplined. Your greed and desire to make more money are undermining your ability to be disciplined, pushing you to take more risk. But taking risks you cannot handle means it is certain you will make mistakes when managing the position. So increasing risk is really a big risk. You are risking not just your money, but also your discipline. You are creating the possibility of emotional damage because you are taking risks you cannot handle. Because maybe the risks you are taking no longer feel exciting enough to you. I have bad news for you. They should not feel exciting anyway. They should feel normal and boring. If your risk amount is triggering your emotions, there is an error there. Reduce your risk. For a long time, I took risks I should not have taken and questioned why I could not be profitable. When in fact, I was taking so much risk that I could not be disciplined. I was taking so much risk that it was impossible for me to think rationally. After I realized this, the first thing I did was, of course, reduce my risk. Let me walk you through what this looked like for me. First, hesitation. I would see my setup. I knew it was valid, but I would hesitate. I would wait for more confirmation. I would talk myself out of it. And then the trade would work, and I would feel angry at myself. So I would promise to take the next one. But the next one also felt risky, so I would hesitate again. Or worse, I would take it late after the best entry was gone. And then I would get stopped out. I could not trust myself. I could not execute with confidence, and my results suffered. Not because my strategy was bad, but because fear was controlling my timing. Because I was being extra selective, and I had to be that way. Because the risk I took pushed me to it. It was not money I could afford to lose. And because it was that way, I needed to think about everything more. I needed to be more detail-oriented. It was not enough to say, this is my trade, I should take it. I wanted to be sure I would not lose money, because my risk was too high. But of course, I could not be sure I would not lose money. So I needed to risk money that I could afford to lose and not take emotional damage. Second, moving my stop loss. This almost destroyed me. I would place a trade with a logical stop, a stop based on structure. And at the time, it felt reasonable. But then price would approach my stop, and suddenly that loss felt unbearable. I could not accept it. So I would move the stop a little further away. I told myself it was because I believed in the trade. But that was not the real reason. The real reason was that accepting the loss was too painful. So I did whatever I could to avoid it. And sometimes the trade came back and I felt relieved, like I made the right choice. But most of the time, it did not. And by moving my stop, I turned a small loss into a catastrophic one. Accepting the loss was too painful because my risk was too high. The meaning I attached to it was too much. All these things make everything harder. When trading is hard enough already, making it harder does no one any good. When we should be finding ways to make it easier, we make it harder for ourselves without realizing it. Third, cutting winners early. When I had a big position on, profit felt fragile, like it could disappear at any moment. So when the trade moved in my favor, I felt this intense urge to lock it in, to take it off the table before the market took it back. I would exit too early, and then I would watch the trade continue without me, and I would feel frustrated. But I did not realize this was not a targeting problem. It was a position size problem. If the position were smaller, I would not feel that urgency. I would let it run. It pushes you to act emotionally not only when losing, but also when winning. And this is why we close positions early. And then we can even feel bad as a result of a winning position when we see it reach the target. Look at what taking excessive risk does to us. We should not do this to ourselves. Feeling bad after a winning trade. This is truly absurd. Fourth, holding losers too long. When a trade went against me and I was taking too much risk, I froze. I could not pull the trigger. I hoped it would come back. I told myself it was just temporary. I held through my stop. I held through my rules. I held because accepting the loss felt like failure. And by the time I finally exited, the loss was much larger than it should have been. All of these mistakes came from the same root cause. The position was too large for my mind to handle, and my mind was trying to protect me in the only way it knew how, by taking control away from my rules and giving it to my fear. When you really take too much risk, you freeze. You watch, but you cannot think. You are so much in survival mode that thinking is impossible. You are almost in shock. Do not do this. You enter a position and you need to place the stop, but you are so focused on the position's movements that you cannot even set the stop point. These things happen because that position means so much emotionally. And again, the reason for this is the excessive risk we take. And then I did something that hurt my ego. I reduced my position size to a level that felt almost meaningless. Wins did not excite me. Losses did not hurt. It felt boring. It felt like I was underperforming, like I was not taking trading seriously. And then something incredible happened. For the first time, I could follow my rules without effort. I could let trades play out. I could take losses without emotional damage. I could think clearly from one trade to the next. Nothing about the market changed. I changed. And this is the paradox most traders never understand. Trading smaller actually grows accounts faster than trading big, because small size allows consistency, and consistency is what compounds over time. And seeing that you can be consistent over time and this becoming your normal makes you a real trader. Over time, you gradually increase your risk per position. You keep it at a level that will not mean anything emotionally. And your entire trading life changes this way. It becomes easier, more sustainable, and reasonable. You do not experience emotional roller coasters like before. Both losses and wins feel normal. This way, everything actually changes. Big size creates volatility in your equity curve, and volatility destroys compounding. You have a good week, then you give it all back in one bad trade. You build your account, then you destroy it trying to force a big win. But when you trade small, you create the conditions for compounding to actually work, because you are not sabotaging yourself. You are not letting fear or greed derail your process. You are just showing up day after day, trade after trade, letting the numbers do their thing. And over time, that adds up to something significant. Not because any one trade was significant, but because you were able to stay in the game long enough for your edge to work. Choose more reasonable paths. Take risks that will not affect you emotionally. Do not think if I take these risks, I will reach my goal late, because every excessive risk you take to reach your goal early lengthens the path, it does not shorten it. You know this very well too, because I am sure you have experienced this. The risks that seem like we will not reach our goal quickly will carry us to where we need to be sooner. Mathematically, it may seem strange, but this is how the process works. The one who moves with patience and calmness rather than haste arrives faster. The one who does not worry about when they will arrive arrives faster. You just feed the right habits and thoughts. Get rid of the wrong ones. Do not focus on how others are trading. Everyone on Twitter may be opening very large position sizes. It does not matter. Your path is unique to you. When your risk is small enough that no single trade matters emotionally, you gain freedom. Freedom to execute. Freedom to think in probabilities. Freedom to behave like a professional. Professional traders are not fearless. They are structured. They do not try to control emotions after they appear. They control risk so the emotions do not interfere in the first place. Trading small is not weakness. It is psychological intelligence. When you find the ideal risk for yourself, you will notice that you can be disciplined much more easily. And this will change everything. Most traders do not blow up because their strategy failed. They blow up because their position size was too large for their psychology. The market did not break them. Their risk management did. And when I accepted that, my entire relationship with trading changed. I stopped trying to feel powerful. I stopped trying to prove something. I started trying to feel neutral. And neutrality is where consistency lives. Your strategy can present you with several textbook trades in the same day. And you can take excessive risk and manage them all terribly and close that day at a loss. Greed does this to us. It can make us lose money even on a day when losing money seems impossible. So please do not be greedy and reduce your risk. The goal in trading is not confidence or excitement. It is emotional neutrality. The ability to treat every trade as one event in a long series of probabilistic outcomes. When you trade too big, every trade becomes a judgment, a verdict on your intelligence, a referendum on your worth, and that emotional attachment destroys your execution. When you trade small enough, trades become just trades. Wins are information, losses are information, nothing more. If you cannot see them as information, unfortunately, you are taking too much risk. This is why professional traders focus on survival first and profit second. Amateurs ask, how much can I make today? Professionals ask, how do I ensure I am still trading next year? And that shift in thinking changes everything. When survival is your priority, desperation disappears, and desperation is the root of most trading mistakes. Trying to make money faster usually makes you lose it faster. Trying to protect your ability to trade allows money to come naturally. The market does not reward intensity, it rewards endurance. And endurance requires appropriate risk. You plan around survival, and before you know it, you have become someone who easily makes the money you dreamed of regularly. It may sound interesting, but this is exactly what happens. I had to unlearn the fantasy that success in trading comes from boldness. I had to detach from the social media highlight reels, the massive home run trades, the P and Ls that made me feel like that was what I was supposed to be doing. But success in trading does not come from boldness, it comes from patience, repetition, and protecting your mental capital just as carefully as your financial capital. Trading smaller is not about making less money. It is about staying in the game long enough for your edge to work. The trader who survives always outperforms the trader who swings for glory. And the moment I truly accepted that, everything changed. Not my system, not the market, my relationship with risk. I am asking you to review your relationship with risk today. Are you taking so little risk that it makes you unserious? Or are you taking so much risk that you will struggle to control your discipline? If you say no to both of these, you are in the right place. The market is not a test of courage. It is not a place where boldness is rewarded. It is a place where patience, restraint, and emotional stability are rewarded over time. Position size is the lever that controls all of that. If your size is small enough, losses become manageable. Wins become routine. Execution becomes repeatable. If your size is too big, nothing else matters. Not your strategy, not your experience, not your intelligence. Everything collapses under that emotional pressure. When I understood that, trading stopped feeling like a battle. It stopped feeling like something I had to win. It became a process I could execute calmly over and over again without needing the market to validate me. And that is when consistency finally appeared. And consistency is what creates real progress in this business. Not excitement, not intensity, not the big hero trades. Just the ability to show up tomorrow with the same mindset you had today. Trading smaller did not make me feel impressive, it made me feel effective, and effectiveness over time is what separates traders who survive from traders who disappear. If there is one thing I hope you take away from this, it is this: the market will always be uncertain, but your relationship with risk does not have to be. And when you get that right, everything else in your trading has a chance to work. Trade smaller than you think. Trade small enough that you can breathe, small enough that you can think, small enough that you can survive. Because survival is the foundation of everything else.